We've had some awful news on the American economy this week. It turns out that almost 1 million fewer people were in work in the year to March than had previously been thought. That's obviously not good for the economy, but really quite remarkably, the stock market rallied on that news and has continued to rally. Since it hit a low after the Liberation Day tariffs 5 months ago, this is what's happened to it. It's gained more than 30%. And gains like that in that kind of a time are really rare. You did see gains slightly bigger than this in the 5 months after COVID and after the global financial crisis, but both of those were after much bigger, earlier sell-offs. You need to bear in mind that in the case of COVID, the Fed had intervened, they'd worked out ways to deal with it. In the case of the global financial crisis, lots of things had happened and the economy was beginning to rebuild. This time around, people sold off because they hated the tariffs that Donald Trump announced on Liberation Day. 5 months later, all of those tariffs effectively are still in place, and in some countries, they're actually worse than they were going to be. So why are we getting a rally like this? Mainly, it's because people expect interest rates to come down. The reason for that is that the economy is in a bad place, but still, in their own right, lower interest rates mean stronger stocks. Also, I think most importantly, after that, earnings expectations are rising quite significantly despite those tariffs. That tends to contradict an economy where everybody thinks rates have to come down. That, I think, is the key worry at this point, looking to the future. If the rally has come this far, it really does require company earnings to be as good as people now think they are. I have been following this, and I will keep on following this on my daily free Points of Return newsletter, and you can sign up for it in the link in bio.